All right. Good evening. Hello, everybody. Welcome back.
Good evening, everyone.
To another episode of Finance Junkies. Good morning to me.
It's good morning for me. Yeah. Just waking up.
What time you woke up? Like 20 minutes ago?
No, like 3. My wife's good. My wife's like the 5th junkie. She's like, you have to get up and do your podcast. And I was like, okay.
That's Chris's wife too. It's like, dude, I wish I had a wife that could remind me to do I have to remember myself. I don't have a.
But you're here all day. You're on this thing. You're talking to people, virtual people all day.
Yeah.
You need a reminder. We got a problem.
A wife. It would be nice. It would be nice to have a wifey that's like, babe, you got to go do the pod.
Listen, they're out there. They're out there. I've been arguing with people on Twitter about that. Now, apparently, I'm arguing that stuff. Somebody posted something.
Arguing what stuff?
Some nonsense feminism stuff, and then I got roped into it. I'm like, damn it.
Okay, let's talk about this before Chris is here. So, Bumble dating app, right?
Yeah.
CEO resigns today.
Mm-hmm.
I don't know if you know the Bumble CEO, but she's a badass, bro. She made Tinder.
Yeah.
And she left Tinder to make Bumble because she was tired of the culture at Tinder.
Yeah.
Do you think the board pushed her out, or do you think she actually stepped down?
I'd have to read about it, but I don't know. I don't know. She was one of those like founder CEOs, and it's hard to get rid of those people.
It's really hard to get rid of.
It's really hard to get rid of.
They don't want to leave.
That was her company.
That was her. Yeah, and when she talks about her users, she has such a special relationship with like the company and the culture, right?
Yeah. Well, what was the official story? I see you, Heinzie Ketchup. Heinzie Ketchup knows. Heinzie Ketchup, you can tell, does very well here in LA.
Which one? Who are you talking about? Which company?
We're talking about the Bumble CEO.
CEO
why
Bumble
why do you think she
either
stepped
got outed
down?
or left today?
I don't know.
I've asked my wife to come on the show, Imna, but she's like, nah.
Yeah. My wife would come on, but I'm not trying to put my family life on blast. You know.
Just your internet search history.
I don't mind that.
Why do you need to go any further?
Dude, that was great. Yesterday we had some great clips. All right, guys, I'm gonna start a Finance Junkies Twitter, and we'll let you guys see it soon. I'll probably make it tonight, and you guys can follow it because we have some golden clips that we need to.
But it's also a place for us to. It's also a place for us to have people help us grow the channel. Like it's a place for us to have one source where you can go to all Finance Junkies related media and news, and then we can all retweet and we can help support that one channel.
Yeah, I agree.
There we go. All right, Heinz.
Do something. Bring me my goddamn.
Tell her to come on camera, bro. We need her to
man. You. No,
he's just a big hand.
Get out of here.
There you go.
Dude, did she say anything about the? Did she say anything about the search history last night? Did she see that clip?
I mean, she saw it, but she ain't gonna say nothing, Daddy.
She just makes sure not to leave scars anywhere visible in the upper body.
I ain't a 26-year-old. Okay, I regulate.
Hold on, I'm not scared of women. I know I'm a simp
not,
sometimes, but
I don't want to make this kind of an episode. Let's not make it this kind of an episode because if we're gonna
Goodwin Deshente comes out again. All right, welcome everybody to the show. We got a lot to talk about. I think we're gonna start off with OpenAI. That's probably the first thing we should start talking about because Sam Altman killed a lot of startups today because that's what OpenAI has to do. So let me get into that, bring up that news real quick, and then we'll go from there. I want to see you guys' thoughts. So basically, OpenAI had their first kind of WWDC today, right? Their first real dev day. And they essentially announced the creation of a GPT marketplace where people can take GPT-4. They announced a bunch of updates to that. And by taking GPT-4, you can essentially create a wrapper around any idea that you have. So if you want to make a therapist GPT, if you want to build a startup that's helping people deal with mental health, you can take GPT and then kind of prompt engineer a new version of it. If you want to build a health coach, anything, anything you have, a chef,
finance channel,
you can use GPT. Finance channel, yeah. Even though I don't know what regulations they have.
We've got to use that. We've got to try it out. We got to have that be like the 4.5 junkie is this GPT. Is SOFI a buy right now? What are you investing in, GPT?
So I guess we'll talk about SOFI in a little bit because Chris is nodding. So did you guys think these changes were really cool, really interesting? Satya Nadella was on stage. He was like, "Yeah, we love the partnership. It's going really well." Do you think OpenAI is undervalued at $90 billion? Like, where do you guys see the potential of this going right now?
Take it away, Chris.
I mean, this is one of those things that is just democratizing the AI prospect. But my thing is, what is the cost to run these queries? Like, it can't be free, right? I mean, all this.
And the other
like,
question is,
how is it?
if you do that, say you want to put your wrapper on it, who controls the data, the input data that it's using to generate its responses? And then the search queries, where does that go? Is that localized, or does that go to like a central location? That
There's a lot of things that we don't necessarily.
Questions I would have.
There's a lot of things we don't know about it. I mean, I have to do a lot more research before I talk about it, so I don't really have too much of an opinion on it right now.
What are you thinking, AMIT? You're the young guy who doesn't care about privacy or data.
I think that's funny. I think this is going to be really helpful for a lot of startups, but the problem is, I don't know. I'm starting to think these LLMs are becoming really commoditized, and they're not becoming as exciting as we thought they were in the before. Like Llama, right? Meta's open source them. Databricks has their own. Claude, Amazon has a bunch of them. OpenAI, obviously with GPT, they're first to market, but it's becoming to the point where these LLMs, I don't even know how valuable they're really. I mean, they're going to be valuable, but how much? Who's going to make the money off of them, right? Because like if you make a therapist GPT, why wouldn't I just use ChatGPT as my therapist GPT? Now you could say the therapist GPT is more like, I guess, advanced at giving you mental health advice. But then the question becomes, how much money would you pay for that? You know, is there going to be significant rev share? Like they're trying to make an iOS app store for GPT in terms of LLMs. And I just don't know how many people would be using a ton of these different versions of GPTs.
My initial thinking, and I want to get your opinion on this, is that this is not so much about generating revenue more than it is saving capital. So this could replace a lot of humans, but it's not necessarily like you could see this replacing, at Bank of America, for example, they have that AI bot,
right.
Erica, right? So they could rig a really good version of that. So basically it would replace all of your tellers. You could see ChatGPT replacing all of the customer service reps. And then basically you create a sandbox, a limited amount of data that the bot could work from, in a sense, telling that employee what they can and cannot say, and then let them have the conversations with customers. That's where I would see this. I think businesses would benefit more from this in that sense, because now you've got customer service reps, infinite number of them, right? That can handle all of the load. You won't have any backlogs, and you don't have to pay them, right? So all those jobs go away, and the quality is controlled.
Yeah, and what it's really going to do, I have a friend who's working on an AI startup. It's going to decrease the back end cost for a lot of them to run the computations they need to do to be able to deliver their service. So that's a really good thing. But in terms of this GPT store for LLMs, I don't know how big that really is.
But what's the purpose of the GPT store? Like I'm looking at it now. I'm looking at it now here. Like, let's just take a look at this real quick.
Let me. I also
here, take a look at this.
Probably show it as well. Got it. Okay.
Yeah. So it's saying here. Okay. So you've got a writing coach, and you've got. Hold on. What is this? Make this bigger.
OpenAI's version of the App Store. Yeah, that's it.
Why won't this? Oh my God, it's so fucking annoying. There we go. All right, so you got a writing coach. I'm eager to help you work with feedback, sous chef, sticker whiz. Okay, so it's basically like a virtual assistant. This is the realization of the virtual assistants that we were promised. But like you said, sous chef, right? ChatGPT can already help you with recipes. So you don't need to have a separate GPT. It's not like it's bogging down the current ChatGPT, having access to a bunch of information that's not related to cooking. That's why I was asking, like, who gets to control the input data? Because that would be the only place that you could have any real value. So if you've got proprietary data that you want this chat bot to be able to have access to that you don't want to be public, that would be something where it would give you a competitive advantage, or it would warrant using that a version of the ChatGPT that's tweaked to a specific industry. But still, I don't understand anything that helps the mental health of people. Who wrote that?
Heinze. Yeah, I mean, look, there's gonna be a lot of services that customize towards it. I just don't know how interesting.
That's honestly that stuff. The mental health of people. That's the part that scares me. If people outsource human mental health to a chatbot, that's where I think it starts to get real dangerous. I'm seeing a lot of those things pop up.
Dude, they've already started. There's a ton of mental health startups.
We need to be talking to other people, and this is actually part of like not my bear case, but one of my the deterrence that I see to like that sort of online therapy is like people are still fallible. So it's like you could be talking to someone who's in a worse position than you are just because they have a title of a therapist. Are they really qualified to be able to give you advice? And people are subject to their own biases, and so you have that too. It's very difficult. The mental health thing is very, very difficult.
The use case that would be the most interesting to me would be probably around doing DD and analysis on companies using their SEC filings. Because one of the things that it takes a long time for me to do is sometimes I'll go through an entire SEC filing and it takes hours and sometimes days. Like if you really want to get the hardcore into it. And the problem is you want to try to synthesize that data and make it as presentable as possible. But you also kind of want to see like changes that are happening in the business as well. And then based on that, make some sort of a prediction on what's going to happen. So like right now, you've got teams at, BlackRock and Goldman Sachs and shit. They do stuff like that. That's all their job is. They take the numbers, they plug it into their models, and then they kick out numbers and say, okay, this is what the target should be for this stock and blah, blah, blah. And every time a new filing comes out, they adjust their calculations based on that model that they have. And so it's interesting to have a lot of data be synthesized. And so think of it this way, like you take 5 years worth of SEC filings, annual reports, quarterly reports on a specific company, and then you have the ChatGPT run it and use the data that's in there to create different things. So like I had a friend, basically I asked him like if he could do me a favor because one of the companies I was looking at, the debt structure was not as cleanly like put as some of the other companies do. So like I wanted to know how much debt does this company have due coming every single year for the next, however many years that they have, because all the filings have like how much debt the company has, but it also lists like all the different corporate debts, that they have. Is the debt fixed? Is it, what is that thing called? Is it floating rate? And then based on that, you can put in today's like SOFR data, and that SOFR data will kick out what did the cost of refinancing will be in what year, and then use that against like future cash flow. So if you have like a steady business and then you apply some models like that, you can figure out like, hey, this is the projected revenue that this company is going to have going forward. And then also you can take guidance and then put that into the calculations as well. So if they're guiding for like, let's say CapEx reduction, right? So you could say, okay, yeah, if the business stays steady or if it grows at 1%, 2%, 3%, 4%, 5%, X, Y, and Z in the next 5 years, this is what the projected revenue will be. This is what the CapEx will be. This is what the operating expenses are. And this is what the stock price should be. And then based on that, you can make somewhat of a, better educated guess on where which direction the stock is headed. The problem that you typically run into when it comes to investing is that you have to keep adjusting these models every time new data comes out. And that's one of the things about long-term holding in the stock market. It can work out really well, but it can also be detrimental, because what happens is if, let's say, you like a company and the business is really good and it's operating very well, and then something changes fundamentally and you are not keeping your eye on the prize and saying, okay, what is going to happen to this company? The business could be headed in the wrong direction, and you are relying on your previous bias to basically stay in the company, and that's what happened to me in the past. So I like to have.
Having said that, let's transition this to.
What you're doing is you're making a case for not having 15, 20 stocks that you have to manage, because it's a lot easier if you've got 4 or 5 big positions, big holdings that you can keep track of. But at the same time, that's actually what I think one of the best use cases for ChatGPT is. I was actually just trying right now to see, have you seen it when it summarizes videos for you? Like I can't seem to get it to work on ChatGPT, but you could take a video, put it in there and say, give me a 200-word summary on blah, blah, blah. And it'll just tell you what that video was about. That's the sort of thing that would be great. Take an earnings call, dump it in there and say, give me based on this earnings call, answer these questions for me, right? What was the revenue? What's it going to look like? What are their headwinds in the next couple of months? How's the competition? Whatever. Or if you've got, say, a few companies in specific industries, say the auto industry, and you take Tesla and Rivian and Ford and whatnot, you take all their earnings calls, dump it in there, and you ask it certain questions. That would be great. I mean, essentially just being able to parse certain data and ask it questions that give you, and you can get answers very quickly without having to run those calculations yourself. That I could see being incredibly powerful, because I see that even, I'm sure you too, when you're trying to post something on X, you're trying to post some data, you've got to sit down and run a bunch of numbers before you can just get to see if a thesis that you have is correct or not. It takes a long time.
So let's transition to this, because this is, you can probably talk about this as well, Chris.
Just one thing before.
Go ahead.
So yeah, you're right, Carlos. It is absolutely helps keep the companies that you're already looking at, but it also helps find companies too. That's the key. Right now, if you are trying to research, let's say, new opportunities, like 10 new opportunities for 2024, you need to do all this math. You need to do all this stuff because of the fundamentals that are changing. So the thing is, like, if you look at how many stocks there are in the world right now, it's like hundreds, if not thousands. And yeah, you could do basic screeners where you do, okay, I want a PE ratio within this range. I want a market cap within this range. I want this industry. And that will help you narrow things down, but it's not going to give you more fundamental analysis. So for me, what I'd like to do is, let's say, take every regional bank that's out there right now. Like, let me get 100 regional banks and then apply those same models to every single regional bank, and then pick out let's say the 2, 3, or 5.
Right. Feed it the last 12 months of data of all those companies and say, based on that, this is what I'm looking for. I'm looking for companies that have low capex, net income that's increasing, right? This much money on the books, like all this stuff. And you say, give me the ones that fit these metrics. And then let's look at the stock price. What's the market cap? Blah, blah, blah. Yeah. I mean, look at even TJ. 417. I have 8 core positions plus BTC, way more than I can handle. And this is a guy who does this all day, every day. If you've got more positions than TJ, you have too much. I would say. And you have a day job, you've got way too many positions. But aside from a dividend portfolio, of course.
Okay, let's move on to this, because we got some people talking about the Finance Junkies pod last night on Twitter. So data-driven investing, the other KRIS says, Finance Junkies had an interesting debate about SOFI last night. One of the arguments that was made is that SOFI is only growing like it is because of its high APY, 4.6 versus nothing at Chase or Bank of America. He called our explanation too simplistic. If that were true, that means every bank would be offering high APY. It would be growing just as fast. Lending Club has comparable and often higher APY than SOFI, but deposits of SOFI are obviously growing. This is a chart much better than Lending Club. Here's the quarter deposit growth rate in 2Q 2023, the quarter where LC actually saw deposit outflows. They had a higher APY of the same APY throughout the entire quarter. So Lending Club's losing money, even though they're offering a ton of return on your capital, whereas SOFI is making money and they're offering the same or higher return. And SOFI customer acquisition costs have also dropped. They are seeing additional leverage in each new marketing dollar as they grow. SOFI is a differentiated product that is leading to differentiated results. And then someone just called KRIS. Someone said some funny comments about KRIS. I'm going to try to pull it up. They were like, KRIS was just babbling last night about nonsense.
Can you pull it up again?
I'm pulling it up right now.
Before you get away from the original post from Data Driven from KRIS. Yeah, you've studied debate. And the problem with his post is that there is a snuck premise in there, right? A snuck premise is an assumption. And here's the snuck premise. When he says one of the arguments that was made is SOFI is only growing like it is because of the high API that's offered. That's too simplistic of an explanation.
I didn't say that.
The case
that's true, because no one fucking said that.
But saying that that's one of the reasons why SOFI is growing, or one of the things that it's appealing for SOFI checking account customers, is different from saying the only reason they're growing is because they offer.
That's a good catch, API. Carlos. That's a good one.
So it's a good point to look at. It's good to look at what he's suggesting or what his argument is. Yeah. But he's arguing a point that wasn't being made.
The argument that I was actually making is you're competing against traditional banks with actual physical locations that have more services. That part is there too. He's using Lending Club because Lending Club is another online only virtual service, So my thing was, hey, listen, these other traditional banks, especially regionals that are local to you, you can go physically there, you can make deposits, you can do all the stuff. That is a differentiator. As they catch up and they start offering more APY, people are going to say, maybe I don't necessarily need that high of a return on just SOFI. I can actually have a physical banking experience. Some people are turning to that. Like if you look at First Horizon, their deposits, there's a ton of traditional banks that their deposits have been growing, like First Horizon, especially. Let me just pull it up real quick. So like I
want to make a debate GPT.
my thing is, not only is the technology, the technology among the traditional banks is also improving. So whatever moat that SoFi has saying, oh, we're only technology focused and everything else, that's going to get competed away, you know? So I like here's an example, right? Just putting it out there. And the metrics on these guys is a little bit easier to digest as well. So like right here, First Horizon back on the offense with 100 million spending on tech spending. You know, they can actually do a lot more tech spending. A lot of traditional banks have the firepower to keep going. First Horizon Hustle won its new customer. Now it needs to keep them. So it's one thing.
So hold on, Chris. So when data-driven investing was like, they mischaracterized SoFi as that's the only reason for why they're growing. Your argument is that's not the only reason, but that's one of the core reasons, which is why they're still unprofitable, right?
Yeah.
So do you think he had a good response to what you said?
Well, bring up what he was saying, because he was
like, his point is other companies offer the same APY, but they're not growing as fast, and so.
But that actually that proves the point of the original argument, that it's not as simple as offering a high APY to suddenly start growing like gangbusters, because he actually made good points underneath it about the cost of acquisition of those customers. That factors into your profit.
Dude, I feel like this proves my point. My point has been it's just a fucking bank. And he's telling me, well, if they're growing so fat, blah, blah. I'm like, well, why is the market not giving it the premium? Because
who's saying that it's not a bank? And if they're saying it's not a bank, then what are they saying?
I don't know. That's why I'm so confused about it.
You're also arguing a point. You're sitting there punching in the dark. Like, who are you fighting against with this?
I don't know. Everyone on Twitter is like, oh, dude, I had to block a guy on Twitter today. He sent me 7 DMs, just like literally cursing me out about what I've been saying about SoFi. And I'm just like, it's a bank. And he's like, you're the reason the SoFi community is horrible. I'm like,
SoFi.
Did you not invest in a bank?
I
invested in a bank.
The funniest thing that I got was I caused SoFi to be down 7% today. Like you
please pull that up.
Yeah, why is SoFi down 7%? That's also the problem.
Everyone was down today, but SoFi took a nasty beating. Man, fintech in general, it took a beating today. So
you're not holding, right, Chris? You're not holding any SoFi?
Huh? No. I told you I'm waiting until it becomes cheap enough to the point where it's a value position.
Are you holding it?
Yeah. I'm that's the other thing. I have a big position in SoFi, and everyone's like hating on me on Twitter for saying it's a bank. I'm like, I don't know what y'all invested in, because I didn't invest in a fintech. The if I wanted to invest in a fintech, I would not invest in SoFi, because there is zero market appreciation of it. You could argue it's overvalued for a fintech because the SaaS margins are not there. The growth is not there for fintech, or at least the market doesn't care. But I invested because I think there's a future and it's a great bank, and millennials will use it, and the member growth is awesome. But I'm being honest with myself. I invested in a fucking bank. It's a bank for kids. Like,
I mean, it's fine.
And old people, because God, the numbers are massive.
I think the thing is, people are so invested in the SoFi thing that they can't handle any sort of like opposing view, and that's fine. I mean, if you can't do it, then that's not my problem. That seems like you need to do some self-reflection. That if you think I'm an idiot, hey, I'm an idiot. Whatever. Like some people put in the comments, I said, okay, thanks for replying. What else? What can I say to you? Like you're part of the cult. You want to keep drinking the Kool-Aid? Cool. Don't make me stop you from drinking it. Go for it.
Yeah, it's very interesting, but I love SoFi. I just Hey,
and by the way, we could be absolutely fucking wrong. Okay. That's how the market works. We could be absolutely goddamn wrong. Everyone has the right and the ability to be wrong. My thing is, let's just be wrong a lot less than we're right. That's all. So
that's a Warren Redlick thing, right? Be less wrong.
Yeah.
I would agree. Okay. What else do we have going on in the markets? Do you guys have any topics, or you want me to bring up some other stuff I got?
I'm just looking at the chat. I feel like we've been ignoring the chat.
We should do some chat questions, because VITALY guys
for a while and read the chat.
Yeah, we should look at the chat. Next week, guys, we'll be starting at 9 p.m. Eastern. Okay, starting next week. So VITALY will be back officially. 9 p.m. is good. I'm sorry if that's a little inconvenient for some of you guys. Maybe it's a bit better.
That'd be what? That'd be 6 p.m. 6 p.m.
for the West Coast folks.
West Coast. Yeah, that'll work. That'll work. it's like, this is the thing. We're both freelancers. VITALY and I both work in the entertainment business, and he's got a job that's taking him out of the state.
I have to address one comment. It's just really golden. So can you pull up the one by, I guess, Cindy Shun? The one that's there. You guys are hypocrites. When SOFI goes up, that one, you love the stock, but if it goes down, you dump it. Like,
I'm looking for it, but you could respond.
I'm pretty sure when the stock is going up, I dump it and I get dumped on because of it. Like when SOFI got to 12, I sold out. People were like, "You fucking short-term minded guy." But it went up like literally 100% in 1 month, and I was like, "Bro, the valuation just went crazy." So I was like, "Let me sell it." And I remember I got hate for it. So this is one of those things that, you know what? Look, at the end of the day, the valuation is what matters. Okay, if the valuation, and this is generally the thing about investing. These guys have a different opinion on long-term investing. I'm more of a mercenary-minded person when it comes to investing with these companies. I have certain price targets. If a company gets to the price target really quickly too soon, I'll shed it and I'll wait until a pullback comes, right? At the same time, if I think that there's going to be a tremendous amount of value way into the future, I don't mind holding it, but the rate of that expansion matters. When you see things just absolutely go crazy, these S curves happen, you know, if there is no fundamentals behind it, you have to ask yourself, like, do I really want to be in the company? You know, so I don't know. Everyone's investing style is different, I suppose. So well, KRIS sold exactly at the top. I mean, close to the top. I won't say exactly at the top, but yeah.
I think you sold it like $9 or $10.
11.45. I bought calls at $4.50 when it was down, and the entire SOFI community rallied behind me. Like, so I appreciate that part. But when it got to like $11 something in a month, and I sold out of that position because I had crazy gains on it, I remember, dude, I got chewed out, but whatever. That's what happens.
Okay, well, let us know in the chat if you guys have any questions. We'll do some questions there. Otherwise, we can move on to some other topics. I'm going to put the link in the chat too if anyone wants to join.
Yeah,
please join. But yeah, starting next week, 9
maybe
p.m.
somebody
Eastern.
that was with us on in Vegas.
Yeah, someone from Vegas wants to join. 9 p.m. Eastern next week. We'll be starting for like the next couple of months. So hopefully that's not too bad of a time for people as well. Okay, so here's the question. Warren Buffett, Berkshire Hathaway, their earnings came out. They have $157 billion in cash. What do you think he's raising cash for? A, why do you think he's raising cash? It's kind of scary, you know, maybe 2024 he's afraid of it. And B, where do you think he's going to deploy it?
I think he's afraid. That's an indicator, a recession indicator to me. He's a really simple investor, right? He's a really simple guy. He's super old school. That to me would be an indicator that he believes that it's going to be better to be in cash coming soon. But that's a ton of money, $160 billion.
Dude, he's making $8 billion off T-bills. I mean, like, that's
a lot of money.
Just to address, someone said KRIS wasn't buying Palantir at $6. Here you go. I was buying call spreads at the time, the debit spreads. Damn it! Can you see?
Hold on. Let me put you there. It's your Zoom.
Got to pull it a little further.
There you go.
There you go.
You see that right there? All right. KRIS was buying at the time. I filled it right there at 130, and I sold out when it got to my price target. All right.
KRIS came with the receipts, baby. Oh man.
I'm just saying, like, when I see value, I actually buy. All right. So there you go. Now I don't know what you have to say, but congratulations.
Okay. Oh, I'm on the bottom now. I kind of like this. It's kind of.
I've heard you love
my position.
I like the bottom. All right, KRIS. What should Buffett do with his $150 billion in cash?
Buy Japanese yen.
What?
Buy Japanese yen. Yep, he's been doing it.
Why?
Okay, so because we're so bored today and we don't have too many topics, I am actually going to discuss something called the carry trade. I put it on the Patreon. You guys are going to get it for free. So today it'll be a very interesting conversation. Do you guys know about the carry trade? Either of you guys?
Say it again. The carry trade?
Correct. But between currency, Forex.
You're literally about to make the case for crypto, and you don't even know it. But go ahead, please. Please.
No.
Please, when we talk, let's talk about investing in currencies. Please, KRIS, the floor is yours. I'll mute myself.
Well, unlike
I was going to try to
Bitcoin,
make a joke on KRIS, but I couldn't think of one. So go ahead.
unlike Bitcoin,
Except sometimes I'm carrying the weight of my ex's feelings. So if you're talking about that,
unlike crypto, there are central banks out there and they control monetary policy. So they have a different mechanism.
And
But okay, Carlos.
And that's a good thing.
Yes. Yeah.
We
Let me
don't want
explain.
central banks.
So let me share my screen real quick. So one of the trades that not too many people know about is actually something that Warren Buffett did over the last 4 years. And it's been super, super profitable for this guy. All right. So one of the things that, you know, everyone knows about Japan, Japanese yen tends to be the currency of safety. A lot of times when recessions come and everything else, people buy up yen like there is no tomorrow. Japan has been undergoing a ton of deflation for the last almost 2.5 decades since the crash of the 1980s. So because of that deflationary nature, the central bank in Japan has kept interest rates super, super low, and at times even negative. Japan has a declining population. They have a high savings rate. They do have a lot of government government deficits, but they also have a lot of foreign exchange reserves that they can use to support the yen when the yen appreciates too much. When the yen actually declines too much in value, they can actually dump a lot of foreign reserves. One of the major creditors of Japan is actually the United States. So I'm going to just quickly take a step back and just explain Japan real quick, because some people might know, some people might not know. Japan is actually the third largest economy on the planet. First, of course, the United States. Second is Japan. Second is China, and the third is Japan. They don't make up nearly the amount of GDP as they once did because of the rise of China, but they're still a big player. And also in terms of just total output of exports, Japan is a leading export. So a lot of things that we talk about right now, like electric cars and everything else, the battery technology, the semiconductor, the silicon wafers themselves, they actually come from Japan. So a lot of great Japanese companies are out there, but their economy hasn't been growing so much. So in order to stimulate their economy, what they've been doing is quantitative easing forever. They've kept interest rates super low. So the BOJ has been able to issue debt at very, very cheap prices.
Quantitative easing, for those in English, means money printing.
Yeah. One of the great things about Japan, though, is that a lot of that money that they have, they've been buying foreign treasuries, namely the United States Treasury, right? So a lot of our debt that whenever it's issued, the Japanese have traditionally been net buyers of our debt, which helps us a little bit because, it keeps our rates somewhat low. The problem is the government has actually taken on a lot of debt. So if you look at right now in terms of central bank debt to GDP, Japan is literally at the all-time high for a modern economy. This is not to say that they're the only ones.
They're at like 230% or something.
Yeah. For a G7 country, they are literally up there. So the former chair of their Fed was all about MMT. Basically, his name is Kuroda. Literally wanted to keep rates as low as possible, get out of this deflationary funk, and let Japan's GDP grow. So if you look at Japan's GDP in the 1980s, it was comparable to the United States and actually exceeding the growth rate of the United States. And then, of course, they ended up losing out in the mid 1990s, and then their economy kind of stagnated a little bit. And so they were still growing, but it was just not growing as fast. One of the things that people may not know about Japan is that they barely have inflation. So whatever the prices were almost like 15 years ago for goods and services are almost the same price today, which is kind of shocking if you think about it. Like imagine right now, like a widget that you could have bought 15 years ago is the same price today. Well, that's what deflation does. It keeps value of things pretty moderate. I mean, there's still going to be some, ups and downs, but for the most part, it's been relatively stable. Now, why is this important? Well, there was actually a point where the United States started to, I'm going to go in this chart in a little bit, where the United States started to raise interest rates, and all around the world, interest rates started to go higher. But the Japanese kept their interest rates super low. So guys like Warren Buffett, what they ended up doing was they went to Japan. They ended up issuing a lot of Berkshire Hathaway debt in Japan at really, really low rates. and they took that money and bought Japanese equities that were yielding 5, 6, 7%. So that is the crazy thing in terms of valuation. So
wait, when did they do this?
now,
When did they do this?
the last 3 to 4 years, right? And so
Ah.
Buffett has been doing this for like literally the last like four years. I don't know if you guys know about the major trading houses in Japan that pretty much control most of like, you know, a lot of the businesses in Japan. But if you look at in terms of carry trade, how the performance is stacked up to the S&P 500, you can see here that the Japan funded carry trade has actually been like generating a lot of money compared to the S&P 500. So even in bad times, Warren Buffett has been coming out ahead. And what's very interesting about it is that at the same time, the Japanese yen has been weakening significantly. So what that does is even the debt that they have to pay back, they're paying back cheaper. Yeah, exactly. So
that's the idea behind what's happening now with our $32 trillion in debt.
Yeah.
That it's actually getting cheaper, even if the amount goes up.
Yeah. So it's kind of interesting. So imagine right now the carry trade is you would take Japanese yen, you would borrow in Japanese yen, right? Take that money, convert it to Mexican pesos, and then use those Mexican pesos to buy Mexican government debt, which yields 6.5%. So look at how much you would be borrowing at versus how much you would be getting in that kind of return.
This is what Berkshire is doing. This is how they're like reducing zero, like the risk. Wow, this is incredible.
Yeah. And then at the same time, the Mexican peso has been actually appreciating and the Japanese yen has been going down in value. So they're benefiting even more. So it's literally like an arbitrage play. And right now, if you look at the Japanese yen is at like an all-time high in terms of like weak. So not all-time high. Let me take that back. Like a 30-year low. So the Japanese yen is super weak right now. So right now, if you look at the dollar, $1 is equal to almost 150 yen. And this is something to keep an eye on, actually. Maybe Finance Junkies trip to Japan may be something we should do.
I would love that.
Okay, we got two guests in the background, but real quick,
I just want to make a response to that, a quick response to that, because what you're talking about there, making money on the arbitrage between currency exchange, is the bull case for crypto. When you're buying crypto, that is exactly what you're doing. And this is actually, I'm saying this to you, Amit. As soon as one Bitcoin equaled $1, as soon as it beat that, Bitcoin beat the dollar in terms of its exchange rate. And right now, one Bitcoin is worth 34 or 35,000 US dollars. That is what you're doing. You're making money on the arbitrage when you buy and sell Bitcoin. The difference is, whereas most of the central banks control the quantitative easing, which is the money printing, which is the inflation of the currency, Bitcoin's is fixed. And most of the and countries, it's variable. It's like having a fixed mortgage rate versus a variable rate. You always want to have a fixed rate. This, for me, so I agree with everything Chris is saying. And what I'm saying is the opportunity in crypto is very similar, or it's basically the same thing as what Chris is talking about when you're playing with the currencies, different world currencies value against each other, except it's all in one place. And the currency that you're exchanging into, Bitcoin, has a fixed rate of inflation versus a variable rate of inflation. So whereas Chris was saying, hey, you know, the value of, or the Japanese yen has been being inflated. So meanwhile, the underlying asset that you're changing into can be inflated away. The value of that doesn't happen if you are investing in crypto, because we know exactly what the rate of inflation is going to be. And we also know, and that's when they say the halving events that are happening, the one that's coming up in 100 and some odd days, it is going to reduce the incoming supply of Bitcoin by 50%. So in a sense, it's going to reduce the inflation rate. Does that make sense? I bring that up because you posted something on Twitter about how people, if you want to make, how do people expect to get outsized gains if they don't research in a company like Palantir? And I'm like, I've been asking you to do research on Bitcoin for a long time, and you seem to have your
it's my dogmatic thinking, man. It's my old dogmatic thinking, dude. I just can't get over the fact that it's magic money. That's all.
But what you're talking about is the same. It's the same exact thing. Crypto is a currency, just like the Japanese yen is a currency. and you're trading in and out. You're trading your fiat dollars for a different currency, and you're hoping that you're going to make money on the arbitrage in the exchange rate as one of them gets stronger against the other. That's exactly what's happening. And in the world of crypto, there's an exchange rate of cryptos to each other: Bitcoin to Ethereum, Ethereum to Solana, whatever it is, and you can track that.
No, that's what's his name? SBF was making millions every day trading in between the pennies on these things when he was trading.
And that's actually those are actually great indicators if you are in crypto. Those are great indicators when things are about to flip. So you just literally ask yourself, how many Ethereum does it take to buy a Bitcoin? If it gets to be too many, right? If you need 20, 30 Ethereum to buy one Bitcoin, you start saying Ethereum has lost a lot of value compared to Bitcoin. And what happens is,
Carlos, I'm buying Bitcoin. That's it.
You
got me. You got me. It's gonna be like $20, but I'm in.
just to finish that point, in the same way that Berkshire Hathaway is watching currencies around the world, saying, these, the Mexican peso is very strong or very weak against the dollar right now, but they're offering bonds with a ton of yield. Let me exchange my currency, my fiat currency, US dollar, into that currency, and then make money on the appreciation on the interest rate that I'm getting, and then convert it back at a time when the peso is actually stronger against the dollar. You have made a boatload of money just by moving it around. That's exactly what people are doing in crypto, except where right now we're talking about the currencies of different countries. We're talking about currencies within the crypto space. So you transfer your fiat currency into Bitcoin, and then you move it around within the other currencies, or like in this case would be the equivalent of other countries, right? You would be moving it around from Bitcoin to Ethereum, Solana, Cardano, as you see them getting weaker and stronger against the main currency, which would be Bitcoin. And you can just make money on that arbitrage. And you know that the massive coin holders or institutions that are holding a ton of Bitcoin and want to make money on that Bitcoin while they're waiting for it to appreciate will trade in and out of the other currencies that have gotten weaker against it. That's why we always look at the Bitcoin dominance chart, right? You want to see how dominant is Bitcoin in terms of the overall market cap of all of crypto.
Dude, I agree with you. I'm a bull. I'm a fucking bull.
Look at that, guys.
I'm not really trolling. I'm just saying it in a trolling way. But like after Vegas and really talking to you guys and the other AMIT, I agree with you guys. I'm starting to really get
well, I actually think what KRIS just explained was the perfect jump off point, because you're already thinking now in terms of currency, not stocks. But then you think about everything he's saying is true, and they're making money when the rate of inflation of the currencies they're exchanging into is not fixed. It's variable. And right now you can do the same thing in crypto, except you already know what the inflation rate's going to be. So you know that the value of the money that you're exchanging into will not be inflated away. As a matter of fact, you know that it's going to be deflationary in 100 and something days. At this exact day, the incoming supply of that currency is going to be halved. Those are things that force the price to go up. And so if you know these things and you trade on these levels, it's a very simple way to make money if you've got a 3, 4, 5 year horizon, and you can stomach the volatility, because you understand that long term the metrics win, right? People buying in and out of it, that's fine. It doesn't change the fact that Bitcoin is going to have whatever price it is. Bitcoin is going to have. Those are great things. Whereas with currencies around the world, a macro or a black swan event could immediately cause quantitative easing, like we saw with COVID. Everybody started printing money, and all of the currencies started to be inflated. And that was great for us if you're holding a home or if you have assets. But if you're looking to buy a home, this is why millennials can't buy homes right now. You understand? So,
yeah, Carlos, let me get these two guys in backstage as well. I think that was a good wrap to the carry trade. Yeah, Garcia and TJ, what's up, man?
Hey,
What's up, guys?
What's up, guys?
What's up?
Hey, Garcia,
for those that don't know,
Garcia,
these are two people that were at Vegas with us.
Garcia, did you actually make any money on craps? Did you actually make money on craps after I left?
Oh no, I lost it all, but I had tons of fun. Like I thought I liked Texas Hold'em, but craps is so much more fun. When you're betting with people, you're losing money with people. You feel good the whole time. Whereas you're at the poker table and you have these like 8 tightwads slowly draining your chips away, and you're just kind of staring at your chips. I'm just like,
yeah, but just send TJ in there.
I know.
TJ made a lot of money.
TJ, you texted me like, I'm busy right now. I'm putting in the work.
How you doing, TJ? Good to see you.
I'm good, man. How are you guys?
I'm good, man. I'm good. It's good to see you again. I'm glad that whole thing
We're
got
good.
sorted out. You know that they ended up charging TJ for the time at Topgolf.
We got it
What?
squared away. They
All right,
reimbursed,
finally got
they
it squared
reimbursed the
away,
card
yeah.
last night.
Yeah, good. I'm
All right,
glad.
TJ, we'll give it to you. What did you want to talk about? You can bring up.
We squared it away, and I was real cool about it.
Can I ask you a question? Unless you have a comment, I do want to ask you a question about something we spoke about earlier.
Go ahead.
As someone who does this, as someone who essentially makes money on trading stocks 24/7, can you just give a 30-second, 1-minute spiel on portfolio sizing and how many positions are actually manageable? To Chris's point about having to be aware of risks involved in your companies that could affect your thesis.
I'd say for sure, less than 10. I think probably, depending on how much time you have at your disposal, I would say 5 to 7 is probably an adequate number. So what I do is I have 8 core holdings,
Mm-hmm.
and then I obviously invest in BTC, but then I also have a couple of index funds. So if you want diversification, just get in an index fund because you're betting on the entire economy at that point, right? You're betting on the S&P 500 or something like that.
How much of your time, say out of 100%, do you spend managing the existing positions in your portfolio versus looking for other opportunities to invest in?
I have spent the last 3 years consolidating my portfolios. So I started with 25 stocks to get to where I'm at now. I call it the Super 7, if you will, kind of like a pun on the Magnificent 7, because I think my stocks are better as a whole. And it took me 3 years to get to that point. So right now, I'm married to these stocks. I'm in a monogamous relationship with these stocks, and I don't give a shit what your name is, what your ticker is, what your upside is. If you're not in the portfolio, you're not making it in the portfolio.
Right. Okay.
I am selling puts, selling calls, collecting premium, and I'm going to manufacture the win. I'm going to dance with the person that I brought to the dance. And it's going to either work out or it's not, because it's too much, dude. Like you're doing a disservice to yourself. And for me, for my clients, like being spread out too thin. If you want diversification, get in an ETF. That's all I can tell you about diversification. You got to be a good stock picker and you got to pick a winner. And I've counted on a lot of you guys for my DD, my SOFI weekly nerds. They're my due diligence.
You're doing good on that Palantir. You bought 75 grand of it at 14.
Amit is Mr. Palantir for me. All things Palantir. I go to Amit's channel and I get my Palantir fix. If I need a bear case on anything, I just listen to what KRIS had to say on it. Because he's the resident bear on the program.
He's the dad. He comes in. You guys having fun in here? Hold on.
He makes a lot of sense though, man. Like, because the thing is, he doesn't buy into the ether or the euphoria too quickly. Like at the end of the day, there's a story, and then there's numbers that have to substantiate that story. And KRIS is very aware. He's very cognizant of that fact, and a lot of people are not. They're lost in the sauce. So I want to talk to y'all about one specific question, and then I'll hand it over to my boy Garcia that I did give some of this wheel deal swag to.
Yeah, I'm still waiting for mine.
I just need to add you, brother, and I'll shoot it over to you and KRIS because I missed you guys on when we were in Vegas. But I have 2 big positions. One is a lot bigger than the other, but they both kind of been beaten down over the last year. Which one do y'all think doubles from here specifically? One is a company that we're all familiar with on this channel named Enphase, because I'm not crying about the price that it's at. I actually think it's fairly priced, to be perfectly honest with you. Based on where the macros are, where it's currently growing, it's not 80% year over year anymore. We're not in that time. I think that right now between like 65 and $100, it's a huge range, but I think that's kind of where it deserves to be. And then another company that's been beaten down substantially that is recently, it's a new holding in the portfolio, but I'm building it up pretty strongly with an average in the mid 50s. My Enphase average is in the 130s, is PayPal. Of those 2, all things being equal, everything that we know about the companies moving forward, which one's going to give you the double faster in your opinion and why? And I'd like to limit the conversation to Carlos because I know you're very, very familiar with Enphase. And KRIS, he seems like he's familiar with all 10,000 tickers in the market. So I'm curious with y'all's insight on which one doubles from here and why.
So the question is, and I want the chat to participate as well. PayPal or Enphase over the next year?
Doubles from here, strictly share price. Strictly
Enphase at 140, PayPal at basically 110, essentially.
exactly.
I'll put
Right.
a poll in the chat, but Carlos, you can say
Yeah, put a poll in the chat. Well, I mean, PayPal's sitting at $60 billion and Enphase is hovering just around 10.
11.
So it's hard for me to say that it's not going to be Enphase, but so much of the reason why Enphase has come down has been because of the market sentiment around the rates. But the story that I'm hearing from the installers is different. So there's sort of conflicting macro data that I'm getting. My market cap alone, I feel like it would be Enphase, but so much of that is tied into rates. If we get an idea that either rates are going to stay the same for like stay at this rate higher for longer, and that's really what it is, I do think that people will eventually just bite the bullet and start buying solar, especially when the tax incentive becomes point of sale and not on your taxes. That I think is going to be a huge thing because that knocks out $7,500 off the cost of an install at the point of sale, which then also limits how much you're borrowing. So that's a tough one because the market cap is the one where I say, damn, it's $10 billion for Enphase to go back to 20 billion it's not crazy, but PayPal has been absolutely smashed. Grogu posted this. Did you see the chart? I mean, it looks like a middle finger, or some people say it looks like that emoji of the praying. It's like it has been absolutely smashed. So they're both sort of victims of the macro. I don't know. I almost say it's a 50-50, but if I have to put my money on it, I'm gonna say Enphase just for the market cap. To be honest, just for the market cap. Because I feel like it's easier to move that stock. That's me. What do you think, Chris?
Let's do Garcia real quick. Let's do Garcia real quick.
Can you switch them two, please?
Oh, I would say Enphase just because as soon as they start maybe projecting better earnings, their stock is probably going to pop a lot more than PayPal ever wished it would. But I don't know shit about either stocks, so.
Okay, Chris.
So what do you? I think of this. I take one step back, and I was talking to this about like some of the Patreon people were asking me like, what was your? How do you analyze certain companies? Like, how do you find them? And the first thing I do is I take every stock, I put it out of a circle. And I slowly bring companies into the circle to figure out, okay, does it make sense? Does it not make sense? So right now, what are the key ingredients necessary for Enphase to be able to sell more microinverters and make a shit ton of money and profit at the same time? Well, they need two things to work in their favor. Number one, they need high natural gas prices, which means high electricity prices year over year. Because what happens is if you see your electricity bill starting to jump, your first thing is, hey, I need to get an alternative, right? If you see a stable electricity price for the next 5 years, you're not in the zone to buy anything additional because you're comfortable. You're like, hey, listen, my bill is $100 a month. It's fine. But if your electric bill goes from $100 to $200 like it did last year, the first thing you're saying, I need to look at solar, right? So that's number one. You need to have the incentives in the right place in order to make solar a value proposition for the average consumer. Because at the end of the day, the consumer is what is going to be driving the installers, and the installers are going to be picking the best product. So the best product, even though it's Enphase, at the end of the day, it's a consumer that's actually going to be able to generate that demand. So number one, you need spikes in natural gas prices to help you. So that's number one. If natural gas prices stay relatively flat for the next 10 years, I'm sorry, solar, the value proposition is not that high, only because the price of electricity isn't going up much, because most of the electricity, especially here in the US, is generated via natural gas. So that's number one. The other thing you need,
just to interject there, what you're not taking into account is the adaptation of EVs. About 29 to 40% of EV owners immediately start looking at solar because it's an easy way of charging their car for free. So even if the energy prices stay the same, the cost of electricity, that's actually more of a bull case to say, well, why not get solar panels that are then be charging? And most of the companies that make solar panels now or make solar systems have a way for you to have your car only charge from solar. That was a new thing, a software update that Tesla came out with. So that way you're not actually hitting your battery or ever charging your car from the grid. You're going to say, prioritize charging my car during the day while the solar is free, and then charge the batteries with energy that's left. So you're forgetting that fact too. And Tesla's got four.
I'm not forgetting. I'm not forgetting that.
They're on track to sell 1.8 million vehicles this year. What's 40% of that?
Right. You know? But there's also another factor there too, Carlos. And the other factor that you need is you need lower interest rates. These are a high capital item.
Yeah,
you know, so if you're already buying a $40,000, let's say $50,000 electric car, the last thing you're saying, hey, let me add another $50,000 just so that I save $100 a month in electricity.
But again, we've discussed this. The out-of-pocket cost is nothing. In other words, you are already, for the next 5 years, you are going to pay a certain number of thousands of dollars in energy costs. You're going to pay that to the energy provider. Instead of paying them, you're going to be paying off a loan. And after the 5 years, 6 years that the loan is paid, it matures, you don't have an energy bill. So this idea that you're taking on $50,000, $60,000, even $100,000, you are already paying that money for the energy you consume versus paying a loan that will eventually mature. And the loan is cheaper than what the energy cost is. And it's zero down. You don't pay any money out.
Carlos, right now, you do the math, okay? If you have a $50,000 solar loan, right, that you need, or let's say, let's go a little bit, let's say $30,000 solar loan, okay? At current rates, close, like if you could get a mortgage, mortgages are like 8%, which means that the price on an unsecured, probably a personal loan, is going to be closer to 10, right? You take a 10% on, let's say 30,000, that's $3,000 a year in just interest charges, not even including the charges for the solar panel itself. You're just talking about interest charges, $3,000 per year that you're going to be paying in interest charges. If you add on the amortization of the solar panels, that's another giant charge. So what is your monthly payment going to look like? And when you value that against your electric bill, I can guarantee you most Americans, especially if you live in like not California, the price of just getting it from the grid is going to be a lot cheaper.
But that's the responsibility of the solar installer local to your area to find incentives and to work out a system that will get you to net zero. This is what happens when you're at the meeting with the solar installer. You give them your bill. You say, this is what I'm paying per month. And it fluctuates. Your energy bill goes up and down over the course of a year. And you say, overall, what am I paying a year in energy bill? Let's say it's $6,000 a year. So I don't want to pay any more than $6,000 for this loan for the next 5 or 6 years. I don't want to. Some people might be comfortable paying a little more because they know if they're going to stay in that it's a primary residence after 5, 6 years, then their bill would go to zero. But that is the job of the installer, is to work it out. The install costs plus incentives, that their payment to the loan is cheaper than what you were paying for the energy out of pocket.
Okay, well, that may be the case, but I'm just trying to say, what are the conditions that you need for Enphase to really succeed? Those conditions actually came about in 2022, which is why Enphase went to all-time highs. You had a combination of high energy prices and low interest rates. All I'm saying is, if you want Enphase to skyrocket, double overnight, those are the two things that you need. You need high energy prices, you need low interest rates, neither of which you are getting right now, which was why Enphase is down so much and demand for solar is down. So if that trend reverses, that's when you'll see your doubling of your money, TJ. If not double, you'll even get 5x. But it all depends on those two predicated things. I'm just taking a macro picture view. At the consumer level, Carlos, you are absolutely right. I'm sure that there are semantics there in between trying to get solar at a reasonable price. But I'm saying from a general consumer standpoint, these are the two things that will incentivize most people to get solar, and that will increase demand for solar. That's all.
Sure.
Okay, so which one doubles first?
PayPal or
Chris,
Enphase?
PayPal?
See, I don't think either. You got two problems.
Chris, you got to pick one.
Well, one of them has to double first, even if it's not within the 12,
I would say if I had to guess only because you guys are forcing me to guess, I'd say probably PayPal, only because they do have a lot of free cash flow that they're using to buy back shares. People don't understand how crazy the return is when you buy back shares. When you're buying back shares, your EPS jumps. And at current prices that these guys are buying back shares, they're buying $4 to $5 billion a year in buybacks, which is kind of crazy. So the share count is $2 billion
left to do. Yeah.
And guess what? They're still generating more operating income. That's the benefit. Look at AutoZone. AutoZone is a perfect example. Their revenues have doubled over the last 10 years, but look at their stock price. Look at their stock price. That's the key to remember when it comes to share buybacks. If you are able to successfully create a share buyback program and have that repeatable cash flow, constantly buying back more and more shares, dude, your EPS jumps, and then your stock value jumps along with it.
TJ, which one do you believe? You believe Carlos or Chris?
I believe short term, it's just a lot easier for PayPal to double because they're manufacturing they're manufacturing it. So with all of their buybacks,
Yeah.
they're buying the float. Essentially,
Yeah,
they're buying
exactly.
the float. So it has to go up.
The share pie just keeps getting
Enphase-
smaller and smaller.
They're
Enphase
like,
also.
fuck y'all, I'm
By the way,
gonna
the
take
poll-
this pizza
the
back.
Enphase has
poll is
also
64% PayPal.
approved buybacks, by the way.
Yeah, $1
Enphase has
billion
approved buybacks.
worth, but that's
Yeah,
a much
and we don't
bigger.
know what, at what
I don't
price,
know.
but-
I think personally, PayPal is positioned to double quicker, but I do think that when I got into Enphase, I went in with my eyes wide open, and I had a time horizon of 2030, guys. So this is going to take about 7 years for this to really turn into something special, in my opinion, because I want to say that there's only like 5 to 6% penetration total as far as the total TAM that's even being penetrated right now. And I don't think that we're going to see juicy returns again until we get to like a 20% penetration. And that's going to take a while, guys, because there's a lot of awareness and education that has yet to happen.
The stock can appreciate way higher than the penetration percent is what I'm saying. By the time you get to 20%, we will be multi millionaires, I think. But you think we get to 20% because we're at 5.
100 by the time I'm 60.
I'm saying, but if you're talking about a 5x install base, it's ridiculous.
So another question, just to make it fun here at the very end. I believe that SOFI doubles before any of these jokers come got profitability in January, baby.
That's
and it's a bank with a little bit of a twist with the financial technology aspect.
TJ, is SOFI just a bank, or is it more than a bank? It's a bank.
It's
you
a
have
bank.
a lot of shares in SOFI.
Today,
you know what it is.
Today, it's a bank that has potential with this Galileo. I don't exactly know how that shit works. Talk to Tevis and the nerds. But I can tell you this: if they go and do,
they can offer. Yeah, they can offer that as a service to other companies.
Junkies. You're not a fucking librarian. You're not gonna make money researching, bro. You're gonna have to buy shares, sell cause, collect premium, bring some fucking money through the door, let Tanner go do the research for you, and make money. Make money. You want to learn how to make money?
TJ,
I can help you with that.
do you remember our first interview? Our first interview, I was like, "How many shares do you have?" He's like, "Oh, like 250,000." And I was like, "Oh, so what do you think about Galileo?" He's like,
"What the fuck's Galileo?"
He's like, "Who's that?"
Did they pay like
$1 billion cover the moon
or some crazy
telescope?
Shit? I don't believe that you need to research the research. Like, dude, I own Google recently. Google, Amazon, and then Tesla. Those are part of the Magnificent Seven. What are you going to research on those 3 companies, guys, that somebody else hasn't fucking already done, that went to MIT and Harvard, Stanford, my wife's alma mater? I mean, you're fucking kidding yourselves. What do you truly think you're going to find at 3 o'clock in the morning on Tesla that somebody else doesn't already know? Sell put, sell cost, collect premium, bring some money through the door, and let it all play out. It's up to Elon. It's going to happen because of Elon. It's going to happen because of Noto.
No, but TJ, let me ask you this question. Okay, let's make it real here. So you posted publicly on your channel. You're down quite a bit of money on Enphase, right?
Yeah. So I can am I able to present or no? Can you help me out?
You can present your screen. I'll share it. But the question for you is, a lot of the research for Enphase you outsource to Carlos, VITALY, et cetera, and you trust them, all that stuff. Do you kind of feel maybe if you had done your own research, that would have been different? Or
no, I did quite a bit of my own. I actually have a intrinsic value calculation model, and my fair value came in the high 120s whenever I started this position. So whenever I landed, this is my wife's account. We got I can scroll down just a little bit more so y'all can see the damage. So there's 1,000 shares in this particular portfolio at 132 average cost. Full disclosure, if you'd have told me that I was going to land here, I would have been absolutely ecstatic. But I thought that the bottom on Enphase was right at about 115 because I had looked at the technicals. I even saw all the scribbly lines that VITALY had on his technicals. I know how to do a little bit of technical analysis as well. And I was like, there's no way this thing goes below 115. So I was like, dude, with my ability to sell put, sell calls, and bring premium through the door, who gives a shit? Give them to me at 130. I actually got assigned 400 of these shares at 145. The rest of them I bought on my own volition, my own accord. But I thought that this was where we're going to end up. On the other portfolio, there's 11,000 shares at $139 average. So do the math on that. So we're definitely bag holding quite a bit here, but we are bringing in a shitload of premium. Like we are selling. We're doing something really risky. I don't recommend it, but I mean, I do this for a living and have quite a bit of experience. But if you look at the covered call premium right there, I'm selling covered calls at $90. Why would I sell them at $90 when my average cost is 132? Because I just don't think Enphase is going to go up anytime soon. So I have a rental there and I can't have it vacant. So I'm going to bring some premium through the door. So I have an asset here that's going to be making me, you know, about $1,500 a month to help me endure the pain for what I think is going to be about 6 months for Enphase to recover to these prices right here. That's just what I think. They're gonna have to get through this shitty earnings report. Hopefully the forward guidance doesn't come out to like another 200 or 250, because at that point, get ready for the $40, $50 range. I think that shit's coming. And that's when I'll fire my final bullet. We're gonna double this position on Enphase, but I gotta find the floor. I don't know where that floor is right now. So I have one more bullet left in the chamber. So I have to be very, very strategic with it, especially when there's a company like PayPal that I feel is like more of a for sure double. There's a company like Palantir. If it dips to like 14 or 15, I'd rather put the money there because the NHS going on, and Palantir is like a cult that's even more so than Tesla these days, it seems. I mean, this thing, in my opinion, is just going to go up and to the right as far as Palantir goes. Then there's Amazon, there's Google that I'm still trying to build out. So I can't be hasty and be like, oh, no matter what, I got to manufacture the win in Enphase. I have to look at the portfolio in its totality and forget everything I've said. Because if Tesla goes to 185, I'm gonna drop 3 or 4 of these companies, not Enphase, because I'm losing too much.
Right.
And Tesla has.
I have a question. The amount you're down on Enphase, are you have a plan to manufacture the win still, right? With
correct. I'm gonna sell covered calls below my adjusted cost basis to bring roughly about $7,500 a month through the door. So that's not a bad dividend.
And what's the risk? What's the risk to doing that?
The risk is just if I don't monitor these positions and Enphase shoots up and I don't roll out of my covered calls, I would be selling these shares below my cost basis. That's not going to happen though. Dude. We're talking about it snowing in the summertime in Texas. It's just not going to happen. So right now there's no catalyst for Enphase to go up to $100, dude. It's just not going to happen. Unfortunately, I wish it would. I want to be wrong. Trust me. I want my cover calls to be under pressure because that means the underlying is performing. But I need to have money available, guys, because I do think that Tesla might be a little bit overpriced right now. But if it gets to 185, I feel like it just becomes too attractive, and people will just pour a shitload of money into it because they don't care about the bottom. They just want to be somewhere what they consider to be the bottom. And I think anywhere from 150 to 185, there's a shitload of buyers in Tesla, myself included. Well, and I want Tesla to become the largest position in the portfolio.
I was actually really surprised how we didn't see as much of a correction as we usually do on a bad earnings, right? Even though they were guided for it, even though they guided for a lower Q3 and had 2 weeks of basically zero production, I was surprised that they did not dip as much as I would have wanted. And I picked up as many shares as I could. But I actually do got a jet, but we should talk about this tomorrow because I just want to share this real quick. This is going to affect Tesla's stock price. Can we take a look?
What do we got affecting Tesla?
Lucid's reporting their earnings tomorrow, and they're expected to lose $338,000 on every Air sedan that they make. Understand, they're losing a fuck ton of money on every single one of the cars that they sell. And then what do we got here? Hold on, there was more. And then
that Lucid
they also recently cut prices for a limited time among the EV wars. So Tesla's price cuts, we're now seeing 6 months out. The competition cannot sustain their current prices, and they're lowering their prices and they're still losing $300 and something thousand on every vehicle that they sell. So these earnings should be disastrous. They actually delayed these earnings a while. They should have been out, or they should have at least had their production numbers and some idea of guidance out a couple of weeks ago. So this has been scaring people to be like, why, if the numbers were good, you would have been talking about them. So these are things outside of Tesla that will affect Tesla. As the story becomes clear that it's very hard for startups to make money, or EV startups to make money selling vehicles, and it becomes clearer that it's even harder for legacy auto companies to make profitable EVs. There's becomes slowly only one player in town, and we know what happens when you find a monopoly like Amazon or like Google. You understand that Tesla's not just the world's most expensive car company. It is a monopoly on EVs. I think that's going to play out well for the stock. And right now it's November 6th. So we are 24 days away from the Cybertruck delivery event. And I'm sure you've been seeing a lot of these things out.
Oh yeah. That's happening this month.
November 30th. And so these are two big catalysts. You're seeing all these companies report shitty earnings, and then they're going to release the Cybertruck, and I think they're going to give us some plans on, let me see. Yeah, here it is. the last piece that I want to share is this. This is also coming up. Wait, is this it?
We'll talk about HIMS tomorrow, guys. I know a lot of you like that stock. It's a popular one. They had some good growth.
Tesla plans to start building affordable EVs priced at $27,000 out of its Berlin Gigafactory, while fellow Lucid EV maker Lucid is struggling to sell its luxury vehicles. So do you understand what's happening now? Everyone needs to sell massive volumes in order to lower their prices. They need to get to scale. Tesla's price cuts have been putting pressure on them, and they're already not making money, preventing them from scaling. Meanwhile, Tesla selling more units at these reduced prices gives them the economies of scale that allows them to lower their prices and bring in which is going to be the category killer, the $27,000 Tesla, which will open up the remaining piece of the addressable market that Tesla needs to hit. We're looking very close. We're getting very close to checkmate. And then I think from there, our stock price of $200, $180, I think all that stuff just goes away when it becomes really clear what's happening. And so for me, the number one position to try to accumulate this month would be Tesla, because I don't know that these prices are going to stick around. And then lastly, Devon are covering Enovix somewhere. Yeah, we do got to talk Enovix. I've been accumulating that one recently too. I'm sure you have this too, TJ, and you too, Chris, when you're like trying to allocate capital, you wish you had all the capital that you needed to just fucking build the positions already. There always seem to be everything always seems to be on discount at the same time. And I hate that, because then you have to pick between your children. You know, do you love more? You're like, fuck.
I blow my wad too. Like, I had a bunch of cash, and then I go shopping too early, and I don't have the discipline to wait for that Black Friday sale, if you will, because my definition of a good price on Tesla is like 200. Chris is like, hell no, I'll get that shit at 125. And I'm like, bro, I already sold 10 rounds of covered calls. Right. So it's just, I don't have the discipline to be patient, bro. Like, it's hard for me I don't have the patience.
It's hard, man. It's hard picking between your kids. But for me, what I help determine that is the macro. Right now, the macro, 24 days from now, Tesla will no longer be a 4-car company. They're going to have that car, and that's never going to change. So I'm like, maybe want to get in now. It's kind of like S&P inclusion or an impending stock split, right? Of course. This is just going to happen, and I want to be a part of it. So
are you in Palantir, Carlos?
I'm a little bit.
I've been researching.
I got a little bit in there,
bro. I'm done fighting Palantir. Palantir is going to the fucking moon, bro. And it's going to be the new Tesla. You're not going to understand the valuation. Don't even try, bro. There's people. I think low key. I think Amit has a fucking Palantir tattoo on his ass already. Like,
oh, you guys want to see it? I'll show you. Right?
Like, I mean, bro, it's just everything I hear is a contract. And now with this boot camp shit, I don't know what it's about. It sounds exciting. Sounds like they're increasing the sales cycle or some shit. So it all seems like good news, bro. Good news on Palantir's front.
Now let me say, this valuations. I was talking about the morning open. This valuation is a little rich, so I wouldn't buy
a little bit, man. But you can get it in the 14, 15, man. That's good enough. The Chris Patel $12. I don't know if that happens. Sell some puts and get your adjusted.
Yo, TJ's a fan, bro. TJ knows everything. He knows your price target, Chris. He watches,
bro. Hey. Me and Chris, we're gonna start a fucking hedge fund together in 3 years, bro. Because I need this fucker on the team, because he's cheap, bro.
No. This is the problem. This was gonna happen.
Brown and bald.
Brown and bald. This is what happens if you start a hedge fund. Okay. So Chris,
another one.
No, listen to me carefully. This is what's gonna happen. Chris, you stay your ass in the background. TJ is going to talk about all the shit you research. He's going to go on CNBC. He's going to be the Gene Munsters of the world. He's just going to repeat whatever the fuck you say. You're in the background. You make the money. TJ is going to get people excited. TJ is going to be like, our proprietary research firm says that Google has these TPUs. We don't even know what the fuck they are, but we're investing in them. Meanwhile, you're going to be actually doing the research.
Bro, nobody wants to know that shit. They want to know how they can make money. That's it.
Amit just gave away his whole business model for the morning open. That's what he does. He just listens to everyone.
Just repeat Chris and Carlos.
And then he goes up guys, I gotta on the channel. He's going to be like, listen, Lucid,
I got to get rocket. My wife's going to file for a divorce, and we're only 6 months in. So,
all right, have a good one, TJ.
No, tomorrow, guys, if you're the carry trade, this carry trade is so. Thanks, DJ. Thank you, everybody. We'll be back 7 p.m. tomorrow.
Appreciate all y'all's work, my guys. Keep it up. Take care.
Thank you, my man.
Take care, guys.
Take care.
Bye, TJ. Bye, everybody. See you tomorrow.
All right, man. Bye.